Good afternoon, everybody, and welcome to the January Kevin Davis Insurance webinar. My name is Sherry Branson, and I'm your host today. Today's webinar takes a look back at the top insurance events of 2015 and a look ahead to what's in store for 2016. I'm now joined by Kevin Davis, the president of Kevin Davis Insurance, and Kevin joins me now from Los Angeles.
Period of growth in over a decade.
Oh, okay. So that's great. So it's been consistent, and it was a good year. And despite all the, the things that happened in 2015, because there were a few big events that did occur.
We had a really bad winter last year. That alone, created some issues. So again, it was a pretty good year considering the things that we had to deal with.
Yes. And the East Coast, if anybody's joining us from the East Coast right now, I know you're getting another big storm, or your first big storm, I should say, of 2016. So be safe out there with the blizzard coming your way.
Now, in 2015, though, the number one thing that really impacted us more than anything else was technology. That's where the ball met the road. That big? Okay. Yeah.
Yes.
That was a big thing.
That was the big thing. That was the big change, and it'll continue to change everything. And Kevin, we've got, the shared economy, they call it, cyber, there's other emerging risks, there's the driverless cars. There's lots of things out there that are emerging, and who knows what new things are going to pop up in 2016. But, I used Uber for the first time a month ago, so I'm part of that shared economy, I guess, now. So it's really interesting to see what's going to happen.
Yep. And for 2016, we face even more challenges from things like drones, okay? Drones right now is the hot topic right now. People bought a ton of these things for the Christmas holidays, right?
Yes.
Right now I'm on the 18th floor. I can't imagine a drone flying by my office here, right?
Right, yeah.
That's what we got to face. And the reality is that means we have, legislation, do we have states? How are they going to control these things? And then top it off on insurance. Who's responsible for it?
Right.
So,
there's so many issues.
Yeah, we have drones, we have 3D printers, a lot of things, and we have the internet, that whole new internet where home-based connections are happening all around us, the Internet of Things, I guess that's what they're calling it. So a lot of things happening on the technology front coming up this year and in the future, which changes the whole way we're going to look at not only our industry, but the world itself.
Absolutely. Yeah, and I did see a story where somebody was flying a drone outside this condo association, a high-rise, and the people, the residents were upset because, they were being videotaped in their own condos. So it brings up all kinds of issues. And another interesting thing about technology is, these organizations, these companies that are gathering all this information from social media, from the internet, etc., they have to be able to manage it all and then deliver it to the right person at the right time. And that's a lot. That's a lot of work.
Yeah, that's the problem we're going to have with all this technology. We are bombarded with information. Most information is not relevant to our lives or relevant to anything. We have to learn how to take that information and say which of this information is really, really important, what's relevant, what can help me move to the next level, what can help me get things done, help me be more effective. The problem is that there's way too much information out there at this point in time.
Yeah. Absolutely. And I know, people are wondering, is the market going to increase? Is it going to go up in 2016? Or, where is it? What are you seeing, Kevin?
Well, the Insurance Information Institute conducted a survey about what 2016 is going to look at. And now, if you ever want any information on insurance, what's going on, what the trends are, look up the Insurance Information Institute. They have a ton of information about our industry. So look it up anytime you need something. But they conducted a survey, and the survey said basically that 61% of the people who responded see no increase in profitability of personal auto, homeowners, or commercial lines in 2016.
Oh, okay. So basically it's going to be pretty flat then. There'll still be a profit, but it's going to not increase dramatically.
Exactly. It's going to be flat. You're looking for a flat year, and we'll see. Now, one interesting thing is that 76% see the number one problem, the major growth leader for 2016 will be cyber insurance. Cyber insurance is going to be it.
So that's the buzzword for 2016, cyber.
And
Cyber.
we'll talk a little about it in a little while later, but that is it right now, cyber insurance.
Cyber insurance, okay.
Also, there'll be continued increase in mergers and acquisitions that we had a lot of activity last year between brokers, agents, and insurers and reinsurers. So you'll expect to see a lot more of that in 2016.
Absolutely. And I know what comes to mind, Kevin, is that big acquisition by ACE of Chubb for, let's see, the cost was $28.3 billion. So that was a huge acquisition in 2015.
Yeah, and they will continue in 2016. We'll see just as many there's a lot of money out there, a lot of capital out there in our industry, and so people are using it to purchase, buy out, all different kind of things going on. So it will continue in 2016.
So there's going to be less companies, and they're going to be bigger companies. They're merging.
Exactly, that's what it is. Yes.
And now, Kevin, another thing that comes to mind is we had quite a few natural disasters. We talked about the storm a little while ago, the storms in the Northeast, and how it just kept snowing and snowing all winter long. What about natural disasters? That usually has a big impact in insurance.
Sure. According to Munich Re, in 2015, for the first time, they recorded more than 1,000 natural disasters.
1,000? That's quite a few, Kevin.
Yep, in a single year.
Wow. Okay, that seems like more than I've heard reported in the past.
Yeah, and one thing that was happening is that, again, because of this improved technology, we can keep track of these storms a lot better, the natural disasters a lot better than we have in the past. So it's not like 1,000 is some a new number or anything like that, or a new point. It is that with improved technology, we're better able to pinpoint exactly where those storms are occurring, natural disasters are occurring.
Oh, I see. Okay. So here's another example of technology changing insurance in the sense that before they may not have known about some of these smaller disasters or smaller situations, and now everything's getting reported and they're tracking it better.
Yeah. In fact, in 2015, we actually saw the lowest disaster losses of any year since 2009. Overall insured losses totaled $27 billion in 2015 compared with $31 billion in 2014. So it has dropped a little bit.
It has dropped. Wow, interesting. Okay.
And if we look at the costliest global disaster in 2015, it stemmed from really those winter storms that we saw last February of last year.
Yeah, they had the winter to end all winters. Boston set all kinds of snowfall records.
I mean, I remember being in Central Park, New York City, last April, and there's still mounds of snow there from that February they had, which was the most worst February they had probably in a number of years.
Yes. Yeah, my friends were putting pictures up on Facebook of their cars because I'm from Northeast New England, and the cars were buried. Some people in the city in Boston couldn't dig their cars out for a month. They were because of mounds of snow had buried their cars. Yeah, it was quite a winter. And you know what also comes to mind, Kevin, in addition to those storms, that big earthquake in Nepal.
Yeah, that ranked number one. That was the biggest disaster, which totaled $4.8 billion and actually killed 9,000 people.
Wow, 9,000 people. Oh, that's a bad one. I knew it was bad, but I didn't realize 9,000 people. That's sad.
Yeah, in fact, if you want to know, the natural disasters claimed 23,000 lives in 2015. 23,000.
Wow.
Which was more than the previous year, 2014, of 7,700.
Okay, so tripled.
Yeah. Now, even that number seems high. If you look at a 30-year average, it's way below the 30-year average of 54,000 deaths per year.
Okay, so interesting. So even though it was more overall, it's still on the whole, when you look back at the history of it, it's still less. Interesting.
Exactly. Yes,
yeah.
Yes.
It still seems like a lot of lives to me. That's still a lot of people.
Well, yeah. Come on. 10 is too many.
Yeah. And Kevin, all these numbers, these numbers crunching, and this is called analytics. I know that underwriters are using these tools, these numbers crunching tools, to get better results. What's going on in analytics right now? Because I know that's how they're able to track these situations much better.
Sure. insurers, what they're looking for is underwriting profitability. And analytics is this tool they use to find more profitable business at a competitive rate. What carriers are out there doing, they're getting more and more data to predict the probability of a loss, therefore improving their bottom line about 3 or 4 percentage points. That's what they're trying to do with analytics.
Okay, that's good. That's quite a big improvement. That would save a lot of money. Mm-hmm.
And what they're trying to do is use that analytics, use the information, and really trying to figure out who their customers are and to pinpoint their customers' needs so they can, again, be more profitable. It is about profitability.
Mm-hmm. Mm-hmm.
And what they do, and what they're doing right now is looking at things like the weather, geography, traffic volumes, the infrastructure itself. And then when they get all that information, analytics create a really an idea, account-specific score that really reflects the probability of loss from theft, fire, property, and liability. So that's the whole idea with analytics, is to do, just got to get information to maintain some kind of profitability.
Mm-hmm.
Now, one more thing I'm talking about analytics is that what they're doing, though, is using that information also to really keep track of claims and fraudulent claims and losses. Okay?
Okay.
I mean, for example, when a customer makes a claim, okay, companies can now use data from the internet. They go to Facebook, okay, they go to LinkedIn, whether to determine the claim is legitimate or not.
Oh, interesting. Okay.
Mm-hmm.
Yeah, that does remind me of, I saw a claim earlier this year in 2015 where somebody had claimed they couldn't go to work, and but they ended up putting pictures all over Facebook of them playing all kinds of sports and jogging and basketball, and so you got to be careful. I mean, people are watching, and insurance companies are watching the social media.
Mm-hmm. It's go right to their page. You can find out more about an individual than anything else using social media. So now, let me tell you an interesting thing about what analytics is doing. There's something out there called pay as you drive. Are you familiar with that?
I've heard of it, but I'm not quite sure what it is. What is it, Kevin?
And basically what that is that what they do is they put like a little, I guess a thumb drive into your car, and it keeps track of all the miles. And at the end of the year, they look at your miles and they charge you based on how far you've traveled.
Ah.
Historically what we do is we fill out an application and we say we're going to do 10,000 miles a year. Well, sometimes we'll do 9,000 miles a year, sometimes we do 12,000 miles a year, or sometimes maybe do 7,000. But the rate is based off that $10,000.
Right.
So to get a more accurate rate, what they do is they keep track of all that information, so now all of a sudden they know exactly how much to charge you for it.
Oh, ingenious. That's great. Yeah, for many years it was just kind of guess and go, and I'm sure that most of the times people were not right. They were guessing too low or too high. So now they're able to actually pinpoint it, which makes a lot more sense.
Now they add it right to your car. They keep track of all the things that's going on. So fascinating what we're doing, analytics, and again, technology. Those are the two things, it's all combined, it's all together.
Absolutely, absolutely. It's interesting. And, with technology, of course, you can't talk about technology without talking about the cloud. I know cloud computing issues, became really big in 2015. Can you explain what that is, Kevin?
Sure. When we talk about the cloud, okay, it's one of those shifts the way we do business. Historically, we had file cabinets. Then we had servers, and we have hard drives, and we kept all our information here with us. With the cloud, what we basically have done is outsource all of our information, all of our data. Okay? So now all of a sudden, instead of me pulling a file behind me or go to our file room, now all of a sudden we use the internet to gather information. And it's becoming more and more. The whole idea is because now you become more efficient with the operation. You have somebody looking over so that you have to worry about as much as cyber losses and things like that we have to worry about if we have responsibility for all that information.
And Kevin, I know so many huge companies are on the cloud, like Apple, Google, Dell, Oracle, etc. And eventually the smaller companies are going to be on there too.
Exactly. That's the whole thing. It creates an opportunity for small and large companies to take advantage of a more efficient operation.
Absolutely.
Now, the one thing about the cloud, okay, is that sometimes there is risk involved. It's not perfect, okay? It's not risk-free. It's not cyber-free. In fact, a couple of years ago, Amazon had an outage that interrupted their business for a couple of days. They lost a small percentage of the data there, what they got back up to. But again, they still lost some of the information. So the cloud is the cloud. Just be aware that there's possible things that happen even in the cloud.
Sure, sure. It makes companies more efficient, and it's a new way to store information. But like any new thing, a risk comes with it. There is risk. And
Exactly.
and as we talked about earlier, Kevin, we talked about cyber being the buzzword. What are the issues related to cyber that you're seeing coming up?
I mean, right now, data breaches are on a rise, and the cost is increasing along with the attacks. So, I mean, you think about what happened last year, and it started with Anthem, which I think happened the year end and before. But Anthem exposed 78.8 million customers and employees. Okay, Primera Blue Cross, another 11 million customers, and then last May, right, the U.S. government was hacked. But it was the Office of Personnel Management twice last May, stealing records for 14,000 current and former U.S. government employees.
Wow. So it really everybody's vulnerable, Kevin. The big corporations and the government. Really anybody can be hacked.
Yeah, yeah. Now, in terms of number of data breaches, it's interesting. Now, here's a good number. In 2015, you have 781. In 2014, you have 783.
Okay, so about the same.
Yeah, same number of breaches. However, in 2015, you actually had 169 million records exposed.
Hmm.
In 2014, only 85.6 million records were exposed.
Okay, so almost double last year.
Yeah.
Same number of breaches, but almost double the number of records. So they're going after companies. They're going after more volume, high volume companies that have a lot of information to steal.
Sure. And if you look at, you have 78.8 million. You have 14 million from the government, and Primera had 11 million. That's 100 million right there.
Yeah. That's an expensive breach. That's a very expensive breach.
It's really, and it's becoming more and more and more.
And Kevin, you're talking about, a breach and someone getting access to, when you're talking about cyber, someone getting access to information like my information that I put out there, your information. What exactly do you mean by information?
Okay, well, we're talking about something called personal identifiable information. That is your name along with something else. So your name has to be number one. And then you're talking about social security number, driver's license number, medical records, financial records, credit card, bank account information. And it has to be either electronically or in paper format. So if you go to your doctor, your dentist, all right, and you're looking over, and obviously you see people's name and social security number or any kind of medical information, that's kind of a data breach. And so
Absolutely.
Names on there, and you said information, that is a data breach. Now, they don't report it, but it is a data breach because your name's attached to another piece of information that's personal identifiable information.
And we're putting that out there everywhere, Kevin. Everywhere we go, people are asking us for this information on all types of websites.
And that's why it's important today to make sure you have cyber coverage out there. Every corporation right now needs to have cyber coverage. And I tell you the one reason why is because right now you divide up the people into two categories. Either you've been hacked or you don't know you've been hacked or not.
Oh, okay, that's scary.
Yeah, and if you don't know you've been hacked, all these cyber policies has a prior acts exclusion. So if you buy a policy today effective January 21st, and you've been hacked 6 months ago, or 3 months ago, or even 3 weeks ago, there's no coverage. So it's very important to buy a cyber policy today.
Absolutely.
Now, and when we talk about cyber coverage, we talk about two areas. We're talking about the liability portion of it. Okay, and the liability portion of it means where I'm going to hold people responsible for having my information out there. I'm going to sue them because that information should have been protected. They should have did a better job, and they didn't. So you have the liability part of it. Then you also have the first party part of it. And the first party is the notification part. Because once that information is out there, people have access to it, you have to notify all those people. And just think, last year you had 100 million people just for those 4 entities, or, well, 3 entities really. So it's a lot of information out there.
That's a lot of people to notify, Kevin. That would take a while.
That's why it's important to have cyber coverages today.
Absolutely. Great. And now, in addition to the cyber liability that you're discussing, there's also electronic crime losses that are on the rise, correct?
And electronic crime is what people forget about. We tell them about the liability and the notification costs. Now, all of a sudden, there's a actual loss of dollars. Somebody gets access to your computer system and moves money. Okay, now where's that covered at? Well, it's covered under your crime policy. It's covered under your wire fraud transfer, your computer theft, and social engineering coverage, or something that's brand new, and most people have no idea this coverage even exists.
Absolutely. Now, Kevin, for the people who haven't heard of social engineering before, can you explain to everybody joining us today what that is? And by the way, if you'd like a copy of today's presentation or have any questions about it, please send me an email to sbranson@kdins.com and I can send you a copy or answer your questions.
Sure, Sherry. When you talk about social engineering, we talk about there are people out there, they're con artists, and they have one purpose, that is to get from you your passwords, okay, your bank account information, so that they can send you an email saying, guess what, you've been late again, please forward to Bank of America before late fees are assessed. Now, what happens is you look at it as your cable bill, but then you look at it, and instead of being, what's your cable company, Time Warner, it'll be Time, T-I-M-E-E. They spell it just a little bit off so that they can collect the money. So, those are the things that you're seeing more and more. Those are social engineering claims.
And the emails look very legitimate. I have received a couple of emails like that, and they look like real emails.
Yeah, and the coverage, what it does is extend the crime policy. So right now you have a crime policy that has wire transfer fraud, and it has computer theft and employee dishonesty. What they're doing is adding a social engineering endorsement to that policy.
Okay, and we have that endorsement, Kevin, correct, to add to our crime policy.
And what it does is provide coverage when you voluntarily give money away. Because when you voluntarily give money away, guess what? That's no coverage. There's no claim. There's no crime loss. You volunteered the money. But now with social engineering coverage, you can now have coverage for situations where you've been duped into giving that money away voluntarily.
Okay. And if anybody has any questions about this endorsement and further definitions regarding what it covers, what it doesn't cover, please contact your underwriter and they can answer any questions that you have. So this is social engineering fraud coverage, which is added to the crime policy as an endorsement. Great. Thank you, Kevin. And I know that we talked earlier about the driverless vehicles. How is that changing insurance, Kevin?
Okay. Now, the next couple of things we talk about really is the things that are really changing the way we're looking at our world, pretty much. They're saying by the year 2035, it's estimated that 25% of all the new vehicles could be fully autonomous.
That's a big percentage.
Right. Robots driving the car.
Okay. I can't wait to see my first one.
Oh yeah, I'll be older by then. I could care less. I'll be sitting in there and sitting in the back, and with my glass I can't see anymore, and fine, I have a robot taking me. Now the problem with these whole robot things is that what if there's an accident? Who is responsible?
Right, exactly. That's the question. Who would be responsible?
And that's the big issue right now. Lawyers are probably having meetings saying that, okay, we're going to sue everybody. We're going to sue the computer system. We're going to sue the manufacturers of the car. We're going to sue the city. We're going to sue the roads. If there's a passenger in the car, we're going to say that he pushed the wrong button. But now the good news is that you have companies like Volvo, Google, and Mercedes-Benz have all pledged to accept liability if their vehicle ever caused an accident.
Okay. Well, that's good news. That's very good news. So there'll be basically shared liability, Kevin.
Well, it's not shared. They're taking full responsibility.
Shared. Oh, they're taking full responsibility. So the driver is, okay, that's good.
Yeah. Now, the reason why they're doing that, because they realize that 90% of all accidents, auto accidents, are caused by human error.
Okay. So they're trying to reduce the number of total accidents. They do realize that with a high-tech car where it's run by a robot, by a computer, there still could be accidents, but there'll be less, is what they're hoping.
Exactly. So about every 10 accidents you have, only one is caused by some kind of malfunction of the car.
Interesting.
And guess what? And so Volvo and Google saying, we'll take the responsibility. We'll pay for that.
Well, that's good. That's good. That's encouraging me to get one of these new driverless cars. So
Yeah.
I wouldn't mind one.
Well, let me know how it works for you, okay?
Okay. Just take it around the block in the beginning because it'd be a little scary, but I think it'd be fun to
Exactly.
have.
Mhm.
And Kevin, I mentioned earlier that I've taken Uber for the first time a month ago, and it was really fun. And I used the app, and they showed up in 5 minutes, so it was very convenient. So we talked earlier about the sharing economy. How is that changing as well?
Sure. The sharing economy is getting bigger and bigger and bigger. Not only you have Uber and Lyft, you also have something called Airbnb, where you're lending out your room where you live, and it's all based on one simple thing, and that is the old smartphone there. The
Yes.
smartphone app in here that you can basically push the button on the app and get anything you want and work with anybody to achieve different things you want to work together in a common goal to reduce some of your costs. So that phone right there has created the sharing economy, and the only problem you have right now is how to insure it.
Mhm.
Because now you're going from me being a private passenger, taking my family, to picking up a client and taking them and being paid for it. So now all of a sudden it's a quasi-personal commercial thing going on, and I don't think insurers have figured out how to handle that yet. So right now, some have, but they still have a ways to go to figure out what they're going to do about this whole sharing economy thing.
Yes, yes. They're going to have to adapt to it because I don't think it's going away. I don't think
No,
it'll go away. It's already super popular, and they're just going to have to come up with some kind of a hybrid coverage or something.
exactly.
Interesting. And then Kevin, another factor I know that with people living longer and longer life expectancies, I'm sure that's impacting insurance as well.
Oh, definitely. The interesting thing about insurance professionals, right? The number of insurance professionals over the age of 55 has risen 74% during the past 10 years.
Oh, okay. So that's it. Wow. Okay.
So we look at an industry there that's average age is about 55 years old.
So it's getting older, a lot
Yeah,
older.
they're getting older faster. Um, and the reason why, if you think about it, though, the baby boomers, it's people who were born between 1945 and 1965. They all turned 60 in 2006.
Okay.
Okay,
hmm
um, but by 2030, 71 million Americans will be over the age of 65.
That's a big chunk.
Yeah,
Yeah. So the population's shifting.
yeah, that's more than twice the number that they were in the year 2000.
Wow. Okay.
So basically, what I'm saying is that in 2030, 1 out of 5 Americans will be over 65, and the fastest growing segment of the population will be over 85.
Oh, over 85. The
Okay.
fastest growing segment. That's
Mhm.
incredible.
Yeah. Mhm.
That's incredible. They'll be using those driverless cars.
Oh yeah, definitely be using a driverless car. And that's the key thing about this whole thing right now when we talk about from an insurance point of view is that, you know, we have to change the way we look at things. Now, we talked about the Internet of Things earlier. The Internet of Things are designed for people who live in their houses and, you know, they have active monitoring services in terms of your heat, in terms of your telephones, in terms of your um, refrigerator. So everything is now geared to this aging population to make things more safe for them so that they can continue to live in a productive life as much as productive they can in their 80s and 90s. And again, they will probably exceed 100. You'll see a lot of people in there that will exceed that age.
It helps them live more independently for many years as opposed to, before they used to have somebody taking care of them, but now if they can control everything from a smartphone, they can be independent.
Exactly.
Call their
Mhm.
car and go to the store, and, and the car drives them back. And wow, that's fantastic. Yeah,
Totally
that's
different time.
totally different
Yes.
world, totally different world.
Mhm.
And then another one of the big items in the news that we heard about quite a bit all over the national news, all over the internet, was climate change, Kevin. And I know insurance companies are definitely starting to pay attention to this.
Yeah, right now there's a big debate about climate change. First of all, is there climate change? Is it not climate change? Is it human nature doing it, or is it natural phenomena? What's going out there? The problem is it doesn't really matter for insurers because insurers know that the severe weather is causing extensive property damage. In California, we had no rain for several years now, so you have all the dry space and lots of fires. You have terrible winters in in the Northeast. And in fact, you're having this weekend a big snowstorm in the Northeast. We know that severe weather is creating problems for insurers, and the question is, what are they going to do about it? How they handle it? And again, you've got to deal with climate change one way or the other because it is impacting our industry, regardless of what people think.
Absolutely, absolutely. Yes, and they're saying they're not debating it. They believe it's happening, and they're just preparing, and they're expecting cities and towns to be prepared so that the losses don't get bigger and bigger.
I mean, think about even what happened in South Carolina last year with a huge flood. But again, you're talking about severe damages from natural disasters that never happened in a number of years. So, and again, it will become more and more and more.
Right, right. With El Nino being big this year, and then we had the floods here not too far from me, major floods that they hadn't seen in like 100 years. So, yeah,
Exactly.
it's happening. It's definitely happening around us, and we have to be prepared. Great. Thank you, Kevin. And now, what are the main issues that you think, the brokers joining us today, what should they be concerned about, and how should they prepare for any of these changes ahead in 2016?
Sure. These are the questions that I kind of came up myself in terms of, okay, what does 2016 and beyond look like? What do I need to know? And do I have the necessary knowledge to really go after the kind of business I'm going after? Do I have the technical expertise? Am I working with the right carrier to understand that? Do I have the kind of organizational support that I need to be able to do it? Am I flexible? So those are the things that we need to know in terms of dealing with this whole new world we're living in. It's not just what once was before. Now, because of technology, because of our smartphones, because of all the things that we're looking at that's different than we did before, the world we live has changed. And as a result, we have to be better prepared to handle these complex accounts that we haven't handled in the past. And if we do, we're going to have really an exciting time in our industry.
Absolutely. And if agencies and brokers are prepared and they know what's coming down the road, they can better prepare and then also handle these issues for their customers much better and give better customer service and survive in the ever-changing world.
Exactly.
Right?
Yes.
Great. Well, thank you, Kevin. Thank you very much for a wonderful webinar. And thank you, everybody, for joining us today. If you'd like a copy of today's presentation or if you have any questions about what we went over, please send me an email to sbranson@kdins.com. And please join us on February 18th, and when we talk about that hot topic again, 5 things you need to know about cyber insurance for community associations. If you have any questions about cyber ahead of time, feel free to email them to me, and we'll go over your questions during the webinar. Have a great afternoon, everybody. Take care.
Thanks a lot, Sherry.
Thank you.